Good morning, traders. It is Tuesday, July 15th. Taking a look at the charts. Equities are mixed this morning. We do have small caps and the Dow trading negative, but we have the S&P 500 and the NASDAQ trading positive. Probably have something to do with some large tech probably lifting the markets up. Looks like NVIDIA is set to open up sharply higher, about 171. You can see on the bottom chart from the charts up from 164 yesterday. So we're seeing the tech space move higher. Now this is pushing NASDAQ up. We are very close to a 20% kind of upside target for the NASDAQ. Actually, if we take a look at our NASDAQ market, you can see here we had overall market sell-off and recovery after the tariffs kind of news, and we kicked into an uptrend and we're surging higher. The markets have a nice little bull flag here, and anticipating it and hoping we're going to see this pop and push higher. It will gap up. We're close to this 560 level to the upside, which is about a 15% move. And more or less, we have like extreme sentiment going on. We saw this with members yesterday in the comments and emails and all of that stuff. But it's really interesting. This is just how the markets and how market participants are driven by emotions, generally just lack having a strategy to follow, or just lack following a strategy because emotions take over. It's easy to let the news and your fear of missing out or fear of losing more to make you trump trades and not take them or skip them type of play. Now, what's interesting here is we had the stock market trading up at all-time highs. We had a pullback over here. This was back in February. A lot of members didn't want to get out of the trade, and they stayed in the trade, and a lot of them got stuck in the big collapse. The technicals, the sentiment, everything was saying get out, which is why we got out. And then when the market had a rebound and started to bounce, we had a buy signal. A lot of people thought it was crazy to get back in, even though the sentiment and everything changed from a bounce. More or less, it was a strong enough bounce that it turned into a rally. And of course, our strategy got long. We ended up being able to buy back into this market at a dramatically lower price. So we got out. We were in a position to still make money as the market fell. We got back in at a lower price, and now we're up, 15% on a portion of our portfolio with the QQQ. We're also along the SPY. But my key point here is that during key turning points is when everybody has the most trouble. Nobody wanted to get out of the trade over here. Nobody wanted to get into the trade here. And now we are seeing everyone, not everyone, a good group of people all saying they want to be 100% invested, they want to be long, and they want to outperform the markets here. Everybody's super bullish. So we ping pong around, and these are what make key turning points in the stock market, is when you have a ton of pushback. We've got what we call the inbox indicator. Typically, we get a wave of people going against what we're trying to do. And obviously, get out of a trade. Nobody wants to get out. Get in. Nobody wants to get in. Now we're actually looking to get out of this trade. We want this market to go a little bit higher, and then really we don't want to be in this market. I believe it actually carries a ton of risk, yet everybody wants to be 100% invested and drive and make a bunch of money. And so this is just the emotions and the waves that we go through. We see it all the time. I've seen this for 26 years. It's never ending. Doesn't matter how much I try to educate and update and inform every day with videos and afternoon commentary updates and stuff. The emotions still trump people, and it's just difficult to get around emotions, obviously. A good example of this is actually what a member shared this morning in the members area, which this is TLT chart. Obviously, TLT, we got out right up here during the COVID crash, right up near the peak. You can see how much bonds have pulled back and how much risk bonds actually carry. People didn't realize you could lose this much in supposedly the safest, a safe haven play. But that is obviously not the case. Typical investment theory, is not safe. You do have to follow price. That's what we do as technical traders. But we had a member this morning really kind of make a good point, and he talked about he went long TLT last October. So let's just take a look over here. Last October we did go long. We had a buy signal in TLT. I can't remember exactly where it was. We had a long, and the trade ended up not working out. We actually had the stock market actually kicked into a buy trigger. So we actually just got out of TLT and moved into the stock market. And if you take a look here, he he went 100% long into TLT in October, which is what our signal said to do. I did the same thing. It went bad quickly as the ACS trade exited down 1 to 2%, which was like a 1.4% loss, I think, that we took, which is pretty minimal. And then, of course, this person unfortunately stayed in. And of course, if we look at price, it continued to sell off. It's hard to see here. Let's just auto scale this, but October was over here, and we can see it has continued to move lower, under pressure. And anyway, he hasn't been here a full year, but he's learned to get in the trade when it is triggered and to get out of the trade when it is also triggered. Follow the process, and this is the hardest part for people to do. And this is, you know, these are the signals we have. They are pretty clear. I'd say black and white, but it's red and green. When to get in, when to get out. We say where to, your portfolio allocation, all of that stuff. If you can just commit to a strategy and follow the odds, follow what the strategy is doing. The best thing to do, I find, when we get into it, when there's a trade that you don't want to do, you're nervous, you put on a small position. Still take part of it, because taking part of it is part of the process of building trust. And over time, you just keep scaling up. And we have people who started with very small accounts. They tested the water, and now they're trading millions of dollars with their accounts per trade. And it's just about building trust and getting that understanding that typically when you don't want to do something and there's a trade, it tends to work out. Those tend to be the best ones. The market has a way of trying to get you the most scared to avoid taking the right side of the trade. So I just want to...